Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, November the 7th, the year 2019. Let's talk trading. First Principles Trading, Part 3. This is something that, if you've watched my videos, you've probably heard me say it a few times. Price is the same on all chart periods. Now, if you go back, you can even see in the history of my work, back when I was doing squiggly line indicator type stuff, you could see that I was talking about different time frames and chart periods, and I was using moving averages, and I wrote that trend indicator when I was doing TradeStation code. And because if you look at one chart period, if you believe in the concept of trend, you'll see one thing. But if you look at another chart period, you'll see something else. And I said I forgot to look at an upper time frame. So I wrote the indicator so it would give me, red and green indications which way that trend was. But then, I've long since graduated from the squiggly line brigade because I realized price is the same on all time frames, and that the only true chart is the one tick chart and everything else is data compression. And this is one of the first principles of trading that you have to understand, because if you don't, then it will lead you down that squiggly path to ruin. Let me show you a simple example. You see here, this is price, and it's changing by a point every now and then. This is the monthly chart, right? When we click here on the minute chart, and you can see price has just gone up a few pips. But you see, these levels change because I've got the indicators set to show you the previous month's high and low and the current month's open. But if I were to change this indicator, I believe it's this one. If all I have to do is make one change, instead of my period being the current chart period, if I set this to the daily chart period, you see, I try to have to do it on both, because one is for open and one is for the high and low. So you can see here in the month, we're looking at the daily high, open, and low. And you can look here at the day. You see you got the previous day's high and low and the current day's open. And you drop down to H4. But you see these values do not change. So chart period has nothing to do with these levels. You can look at whatever chart period you want. You can go all the way down to the 1 minute chart, and you still have these levels at the same spot. Now, you can say, yeah, but I want to trade, the daily chart. No, you're not trading the chart. You're trading price. You are looking at the daily chart. And I hear so many people say that, and to me, it's like nails on a chalkboard, because it's just so inaccurate. It drives me nuts when they say it. Now, you might ask, well, there's all these systems out here that talk about you can go down to the hour chart or the 30-minute chart or the 5-minute chart to pinpoint your entries. I mean, well, what is it that they're pinpointing? I mean, something that I've taught traders for a while is about the turn trade. If you see prices going down, if you see a bear candle, then you see a bull candle, well, that's a price turn right here. And then all of a sudden, You have another bear candle. You got a bull. There's a price turn. And you see what happens. Sooner or later, when you get a turn, price is going up. And even right here, had you taken this trade, there was an opportunity to make money right here, because you see it went up. Then as it came down, when it cut that wick, if you had entered right here at the open, you could have at least locked in some profit. Or if you used a trailing stop or something, you would have locked in some profit. And then, here at the top, right here, you have a bull candle followed by a bear candle, then another little bull, but then you have a bear, and you see what happens. You got a turn, and price went down again. And here's the same thing. In this particular case, you had that. You might have been stopped out, but then you could have gotten back in and taken a trade. Here, bear followed by bull. Once again, maybe you got stopped out. Maybe you took a little profit. Bear followed by bull. Maybe you got stopped out. Maybe you took some profit. But you see, this pattern repeats itself. So you can see it on the H4. You can see it on the H1. You can even see it on M1. Here's a nice example here. Here's a nice example here. Granted, you're only getting 3 or 4 pips, but that's still a valid method of entering and determining which direction to trade. Now, something else about trading, and once again, if you look at the wicks and you look here at the dollar yen, you'll notice something here. You see, there's some big candles here. These long candles right here and here. Here's another long one. If you notice, you had this long candle. Price came back down to that open, as I mentioned before. Then you see here, it came through here. Well, then it actually even went lower, but then it turned. And when it came back as turning up, this would be a nice place to enter the trade. You could either do it right here on the break of this high when price turned around. This is at H4. But the idea is, if you look at these levels where you see price is being pushed up, all you have to do is put the crosshairs, and you can see, price got pushed up from this place twice. Okay, these levels got tested and pushed. Then if you look at H1, you'll see the same thing here. You see this big candle right here? If you would have just set after it turned, if you would have set an entry here, there was money to be made here, and then once again, money to be made right here. Just looking at this big candle, because what's this mean? People bought and shot price up from that level. And then right here, if you look here, you see price had gone up, then somehow price came right here, and then, you see this? It just pushed it all the way back up. Well, right here again, you see this level? It's identical practically. Right here. Right there. Identical. And so you can sometimes see these clues by looking at the different time frames. Okay? But remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And that when you trade, it's very risky and you can lose all your money. And because of that, if you're looking for financial guidance, financial advice, you should seek it from an accredited financial professional. That way, you can rest assured when you lose your money, you got your advice from an accredited financial professional, rather than just some random person you heard on a YouTube video or found something they posted on an internet website. Okay? And because of that, when you trade, make sure you've got your risk and money management in place. Don't lose any more on any particular trade than you're willing to lose on any particular trade. whether it's $1, $10, $100, 1,000, it doesn't matter. Don't let any trade go past that point, because if you do, it's the road to ruin. And so, back to this simple chart, to me, it's just so simple to see, where the entries were. You can call it Harry hindsight if you want, but I'm telling you how to do this now so you can do this in the future. I mean, you can even come down to M15 and you'll see some of the same things. I mean, right here, price pushed up. And so when price broke, it broke through this level, then it came back, and it came back with a vengeance. Okay. So right here, you can take that daily low breakout, and then when it comes back, you can go back the other way, just like the daily open. Came down, came back, hovered, and then up and through. For the week, oh, look at this. We've got all but one filled the gap so far. And it doesn't look like the herein going to fill the gap, but anything could happen. This week something could happen. It could turn around by 100 and some pips. We could wind up red. But so far, that hasn't happened. We're only 51 pips from the yearly open. And as you can see here, we actually touched the high of the first day, trading day this week, and then bounced and went up. And I've been telling you traders about this. We can just look at the simple system. You take the opening candle for each week, each month, and then the year, and then you can play off of those levels. And you can see here, looking at the opens, right here, cut across these two opens. You can do the same with the highs and the lows. Inside bar, yesterday was an inside bar, and look what happened today. There was a break at the top, break at the bottom. That makes today an outside bar. And here again, we dipped back into that weekly inside bar range and shot out like a rocket. I don't know what to tell you, but I'm not trying to twist your arm. But for those of you looking for these trades where you can set the trade and walk away and see what happens, this just might be something you could do. For today, we only have 4 pairs with the range exceeding 100. Right here, we're putting in some H1 highs for the month, highest opens for the day right here, and a daily D1 highest open, but you can see prices dropping off those levels at the moment. Pivot point was inside the zone, took it out, no real bias, so just trade what you see if you're a buy zone trader here. And for those of you, there's so many traders asking about filtering trades. Don't try to take the method and just trade the method. Accept the losses. You try to filter out the losers, you're going to filter out the winners, and you're going to mess up the frequency distribution of the wins and the losses. Just take what you can. Set your stop loss so nothing bad can happen other than losing what you're willing to lose. It's just that simple. Rat zone, red rats, time to feast. We already took out that pivot. You see that there's a missed pivot here and a missed pivot here. We'll see that right here. Couple missed pivots. We got 2 so far this month, 1 from last month. Price action. You can see we got the 3 ball. Price not wanting to stay with it between any 2 lines. It just won't. Wick zone trades, very profitable today. Once again, trading those highs and lows of the previous day, week, and month. Those lines proved to be profitable. You can see here at the tick level, prices moving down. And the Einstein line's not showing anything at the moment. Wick zone, prices just all in the wick zones. So, fellow traders, just remember when you're trading, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, click subscribe and click the bell to be alerted when a new video is out.